Hey everybody, hey traders, Chris Pulver here. Welcome back to the Pulver Report. It is July 3rd through July 7th. This is a weekly outlook. This is a video from Monday the 3rd. We have a holiday interrupted trading week. The market's closed today at 1 p.m. Eastern time, and most brokers close as well. I think Forex will be open. We'll take a look at the currency strength chart. We'll take a look at the SPY, the Qs, dollar, gold, silver, Bitcoin, stuff like that. We actually have a lot of news on Wednesday, Thursday, Friday to keep an eye out for, and we'll see how price action plays out. So let's jump into the risk disclaimer. We know there's risk in trading. Please always use trade capital only. You know the deal. Social media, if you're following me, this is the best place to find me. YouTube.com/Chris Pulver. Mondays and Fridays for the Pulver Report. Most of the time live, like 99% of the time live. Just with the holiday this week and a shortened market, I just decided to do a video post for the weekly outlook instead. But we will have a live session on Friday the 7th for a little recap and see how everything shakes out this week. And yeah, let's get to the charts. So here is the news for the week. I want to talk about this. So looking at the 3rd, so today, we had Swiss CPI that came in lower than expected, which is probably a good thing as far as what the Swiss National Bank is doing for rates. They've recently raised rates to 1.75%. If I go to cbrates.com, we have a Reserve Bank of Australia rate decision this week. It's expected to pause at 4.1. Here's Switzerland down here at 1.75. That was rate decision on June 22nd. So improvements in inflation data might help keep the Swiss National Bank a little bit more neutral to even dovish and just stop raising rates at this point or pause. And if that's the case, I do wonder if the bigger technicals and kind of carry trades play out against the Swiss. Again, traders know this in my flex trading room. One of my better positionings this year is just how I'm taking some positive swap in some of these trades and looking to see if the Swiss gets weaker over the next 6 to 12 months. And I'm looking to take advantage of that and capitalize on positive swap, which is rollover for currencies that have higher interest rates, as well as a weaker Swiss National Bank, whether that is full on intervention or just price action playing out to weaken the Swiss. Okay, so that's happening there with CPI. We have ISM PMI numbers this morning. They came out a little bit softer than expected in the U.S., probably what the Fed wants to see, amongst other things. RBA cash rate, like I said, expecting a pause at 4.1 and stay the same. Wednesday, actually, also July 4th, 4th of July, so U.S. bank holiday. Markets are closed, equities closed. There's some other news out there, but RBA will be maybe sprinkled in the Forex side. Wednesday, we come back from 4th of July off, OPEC meetings all day, FOMC meeting minutes. Probably the same message that Powell had earlier this week, which is 2% inflation. We want it. We're going after it. There's still a long ways to go. We're still going to pause, maybe 2 rate hikes this year. It looks like July 26th is another expected rate hike. So the minutes will probably say the same thing that Powell's been saying the last couple of weeks. July 6th, Thursday, ADP Non-Farm. Usually it comes out on Wednesday, but it's pushed to Thursday this week. That's a precursor to Friday. We also have another JOLTS job opening reports and ISM PMI numbers for the U.S. This is services versus manufacturing. Usually the service side has been catching up versus manufacturing. Manufacturing is slowed, anything sub 50. If services gets below 50, that's not good. So anytime that these ISM PMI numbers come down below 50, that does kind of poke at recession scares. Which again, we've kind of been on thin ice for this whole recession. Like, are we in one? Are we not? What's the economy like? Obviously, the stock market isn't reflecting that. Stock market's up. We have a nice little melt up on the SPY this year, melt up on the Qs. Big mega cap techs are leading the way. AI hype is going crazy, so it's going to be interesting to see how the second half of the year plays out. And then Friday, little double whammy of high impact news. We have CAD employment as well as U.S. employment that'll come out Friday morning at 8:30 a.m. Eastern time. Okay, so that is that. I wanted to take a look at this really quickly. Year to date, NASDAQ up 32.74%. This is as of Friday's close. S&P up 16.38%. The Dow is up 3.84. The 10-year, this is a Treasury note down to 3.84. I want to look and see where that 2 to 10-year inverted yield curve is. It's probably still pretty steep. We'll take a look. Bitcoin hanging on to that 30K mark. If we see Bitcoin, it looks like a bull flag right now. Could be resistance at $30,000 to $31,000, or it could be a bull flag in the making. Where if we break above 32 with some momentum, I don't think there's really much stopping Bitcoin until we hit 45 or 50 grand. So it's pretty exciting for those that are still invested and still looking to stay in Bitcoin. Your enthusiasts out there, your traders out there, your maximalists out there. I'm sure everyone's cheering it on. We have some exposure in the trading rooms. I personally have some Bitcoin. I've had it since 2016. I've been in and out of the markets, that 6 or 7 year period. I still like buy and hold. I still like buying at good levels. I still like, the asymmetry to the trade. It's just risk capital. Nvidia up 195% with the top performing stocks this year. I currently am short on Nvidia on some call options, some bear call spreads really, and I've got a 410, 415 had some opportunities to close those out in profit. I took one loss for $2. The other ones are all posted for the next like 3-4 months, and I'm looking at like $2.75 a credit. So hopefully I can win on the next 2 or 3 trades, get this to fill the gap a little bit, and then make some money on Nvidia on just a short-term play. So let's have a look at that one really quickly. So Nvidia rather, 424. Crazy, ridiculous, overextended conditions. These are my trades: July, August, September. Bear call spread 410 by 415. I collected 275 in each one of these trades. So let's just say that we don't break the high, right? And we start to fill this gap. We start to come back in. This is the gap that would look to get filled. Or even if we test the low around 360, 370, these are all in profit. So, because of the expirations, if these come down sooner, time isn't necessarily working in my favor, although the decay is good for me. This would be in a decent chunk of profit. So rather than taking the full 275 and having to wait to expiration, maybe what I can do is get this for a debit of, let's say, 50 cents or a debit of, let's say, 75 cents. And I can walk away with 225 or $2 net profit and do that over all 3 trades and walk away positive, right? Let's just say hypothetically that I close out for $2 on each of these. $2, $2, $2. Well, that would be a $6 credit total. I gave back 2 when I lost on this first gap. I thought we'd fill it sooner. We didn't. So I give back 2. I walk away with 6. I still make $4 of credit. $4 per contract. Pretty good, right? Okay. So that's that in the near term. Let's go to the SPY. The SPY this week with the news, FOMC meeting minutes on Wednesday, some non-farm numbers on Friday. The gap that we had on Thursday, Friday to end out the quarter, I'm pretty interested to see if we hold this area. If the SPY does not break and go higher, we are into July. Typically, it's first half of the year. If we had a nice run first half, we kind of pause through July and August. July historically is the second worst month for trading. It's usually if it's positive only about 48% of the time. If it is positive, it's less than 1%. So even if this is our July, that'd be a very slow July, but I think that's possible. If we have a volatile July, I could see this, right? I could see potentially a big, could be a bull flag. That seems like a big correction, but at the very least, I'm looking to see if some of these gaps get filled by this week. So by Wednesday, Thursday, Friday, when trading resumes, if there's more volume coming to the market, we start to get a quick poke down to like 441 or 440. And from there, I've got some short-term plays that I'll be profitable on. That's what I'm looking for this week. And yeah, that's it. So maybe a bit of a gap fill on the SPY and the Qs. Maybe a little bit of an up move in the US dollar. So the DXY, which still is holding on to the structure, I still think this is bullish until we get to 105, 106, especially if the rate hike is coming and the Fed reiterates that on Wednesday's meeting minutes. We're expected to see a rate hike by, I'll switch this over to the CME watch tool. A rate hike is coming most likely on the 26th, though that'd be a 25 to 50, or actually 25 basis points hike, which brings the official cash rate up by 25 basis points. So that's 86% probability. What's interesting about this little tool here, the CME group, is it changes, okay? But by the time we get to an FOMC meeting, this has been 100% accurate since 2009. So the Fed, for as much as they have their messages hawkish, dovish, whatever they do, they are telling the market essentially what they're doing. So when there's a rate hike that is priced in the high probability, it's probably going to happen, right? And then we have a pause in September. We have the pause in November. Now, this is potentially the other rate hike scenario, would be a rate hike coming in November. Okay. Right now, it's not priced in. Right now, we have a 55% probability that we stay the same, but this is where we see the highest jump in maybe another 25 basis points. Again, that's going to be data dependent. That's probably going to be meeting to meeting, month to month, and we'll see how that data plays out. December, still forecasted to be highest probability at same, 5.25, 5.5. Okay. And again, there's a little probability there for a rate hike, but that goes back to the same thing in November, is maybe a hike by November, December, and then getting into Q1 of next year, maybe looking by March or May, the Fed starts looking to cut rates. I want to take a quick look at the 10 and the 2-year. So if we look at the US 10-year, trading at 3.81, we look at the US 2-year, trading at 4.8. So almost a 1% differential. Oh man, I wonder if that got deeper. Let me check the 2 and 10. 10 and 2 on Y charts. Man, it is right back down to the deepest level that we've seen. That's crazy. So our inverted yield curve is getting, deeper once again. It's pretty wild. This is, one of the longest I've seen. If I go to max here, I don't know how far this goes back. Yeah, this goes back to 2018. There are obviously there's more data here, but every time we poked and had the inverted yield curve, the market's been, oh, it's a recession, and it has been like the sell-off in 2020, right? All of 2020, so essentially we had our inverted yield curve here. We had a big sell-off all year until October's low, and then 2023 we've already been inverted, way inverted. Now we're back to these lows with this deep and steepening curve, which is nuts. But what does that mean? I don't know. I mean, honestly, at this point, like this looks very different, right? This looks very different than inverted, and everyone loses their mind. So this is kind of to me, this is uncharted. I mean, to see it last this long, and it's like the market's kind of shrugging off the recession, it's shrugging off a lot of things. It's just kind of trotting along and doing its thing, and AI hype and tech is leading the way right now. So anyway, it's interesting. This has become back to the kind of the peaks, but it might be just choppy in the bond market. We'll find out. So all right, we'll watch. And let me check some other instruments here. I talked about Bitcoin with the bull flag at 31. We're sitting here at 30,725. Just watch this level. Chart alarm here. I'll put a chart alarm at this low as well. We had a spike down there last week. Let me put that on right now. This would be chart alarm at the weekly pivot around 29.3. Coming back for efficiencies, question mark. And so I look at this. If we break the low, I would look for this level to fill or even coming back into the same lows again. If it doesn't break this low, it doesn't close below that low, then I'm looking for a bull flag. So this low, this high, there's your flag right there. It could be choppy here for the next little bit, but if we get a break above, I think a decent break with momentum above 32,000, there's not really much stopping this until 45 or 50K, which from that position is a pretty good jump. And that could also drag up Ethereum, that could drag up Litecoin, that could drag up a lot of crypto. But Bitcoin is really my main barometer. That's what I'll be focused on. All right, let's take some currencies. Dollar index we already did. Oil with OPEC meetings this week. We're trading at 70.75. Still a lot of resistance at 75. Still a lot of support at 65. Choppy range has been choppy. We'll see if it stays choppy. Most likely it is. Gold and silver. This will depend on the dollar. I think gold with tapping the 200 EMA last week, it's coming back up here towards probably around 1975 to 2000. I could see gold failing there and looking at another run in the dollar index. So I still think dollar index heads up to 105, 106. Gold possibly sliding lower. Silver channel bound, maybe a little bit lower to the channel around $21.50 to $22. And then from there, I'm looking for upside potential in this bull channel on silver. Right, currency wise, and just check on a couple. Aussie CAD I'm long. This has turned up pretty nicely. Aussie Swiss turning up nicely. I remain long on that one. Yen crosses. Just stay with your short-term alignments. Aussie New Zealand. We had a couple of shorts we made some good profit on. Aussie dollar. We have a trailing stop loss. Actually, I didn't move my. Actually, we got limited out. No, we didn't. Yeah, we did. We took profit last week. It hit 66 last week. We took profit. We sold this at 67.60. Took profit at 6,600. Okay, we're good on that. CAD Swiss, I'm still long. CAD Yen, stay with your alignments. This could still have some upside right up here to the previous highs around 110. I do think that at some point we're going to get a pretty clean trend line break. I would just watch something this simple. If we start to see the CAD Yen break this trend line right there, then I'm looking for a short. In my workspace last week for Flex Trading Room, all I did was put these big bold trend lines and said, look, I'm not really a seller until these lines get broken. Everything else is, holding, pullbacks, buy the dips, trade alignment, stick with your trends. Eventually, we break this trend line. We start looking for bear patterns, and we have confirmation to sell like crazy. Until then, the JPY remains weak. Swiss yen, same thing. Overbought conditions on the daily. We've hit a big round number at 160. We're at a 1618 retracement extension, which is kind of nuts. And again, this is the trend line I'd like to see break. I think if we break this trend line, we get over here, there is a long ways to go. But that confirmation saves me from, do I call the top here? Do I call the top here? Do I call the top here? I don't want to, so I'm not going to. I'll wait for confirmation. Okay. Euro Aussie. I was looking to sell this at the equal high. I'll keep an eye on that one. Euro CAD, we're still long CAD Swiss. I'm going to stick with that one versus getting short Euro CAD. Euro Swiss looking to stay long until we break above parity at 1.00. Hanging on to this trade until we hit 103.50, possibly 105. Euro pound, no trade. If you're long, great. Otherwise, stay out of it. Euro yen, stay with your alignments. Euro New Zealand, no trade. Euro dollar, no trade right now. Watching the DXY. Pound crosses, we're looking to short the pound Aussie back down to range lows. So that would be a, sell high, stop above, go to target the lows, look for a little surplus and profit. Pound CAD, no trade on that one. Pound Swiss, I'm hanging on to longs. Hopefully we get up to 120 on this one. Pound yen, stick with alignments again. Overbought conditions, look for an easy trend line. This is not it. It's too steep if you're getting really vertical. So something like that. Give it some space, right? That's still a very steep trend line. But if we get on the right-hand side of this trend line, it looks better. So just give it some time. Pound New Zealand. This one, I actually talked to a couple people on this last week. I see a rising wedge right here. If we break that rising wedge, we see price coming down to this area. I could see this big candle getting filled. So anything between 2.02 and 2.00. If we're out into this open space, I think the bears have control for a little bit of a range. Okay, so I would like to see if that wedge breaks to the downside with confirmation, and then look to trade it back into this this pocket, this inefficiency. All right, pound dollar, no trade on that one. New Zealand CAD, I'm still holding long. New Zealand Swiss, I'm long. New Zealand yen, it's still pushing up, but this one could also be reaching overbought conditions. Trend line is going to have to be the play. New Zealand dollar, no trade. Dollar CAD, I'm long. Looking at a monthly pivot, that's not bad. 33 and change. This gets my trades. I'm in two trades. I have a 32.97 and a 3200. This trade gets into profit. This trade gets into profit. I'll probably close it there if this monthly pivot gets tapped, just to be protective. I think this yellow box also gets filled, but for more conservative profits, that's a 33. I'll put 33.10. Not watch list. No, don't do that. 33.10. 33.10. If that monthly pivot gets hit, I'll take my profit. That'll be about 13 to 15 pips on one trade and just over 100 pips on another trade, and I'll be fine with that. Dollar Swiss, I'm still holding long. Dollar yen, overbought conditions on the daily. We hit the pocket. Again, just don't force a trade. I don't know if this is the top. This thing could come all the way back up to this high, to this high. Does the Bank of Japan switch their policy? Do they change their words and commentary? I don't know. But I do know reading a chart, and that would be here. If that trend line breaks, better sell trade. But if it is, all in this area and it's still yellow, right, and it's sideways, it doesn't break the trend line. It still goes up. So I need confirmation. And honestly, if I was going to pick my trade, I'd rather sell it up here. I'd rather look at tighter confirmation, smaller time frames, get an entry up here, and then let it break the trend line, get a head start, and just move this thing all the way back down to the lows. That'd be a phenomenal trade if it plays out. Otherwise, it's just the BOJ sticks to their guns, keeps their interest rates super weak, has a very weak currency, and this just goes up, goes up, goes up. Everyone looks to short it here, goes up, goes up, goes up. Who knows? So don't fight the yen. Lesson learned. Okay. All right. That gets to a lot of currency pairs. 34.99 and dollar Sing, trying to get back to these highs again. 35. I'll put a chart alarm here that went off last week, and I was kind of excited, but it pulled back. So I'm going to set another chart alarm here around 3,600, and just looking to see if I can hang on to dollar Sing until we hit 37, 37.50, which is right up here towards this yearly pivot. And that covers pretty much all my currency pairs. Turkish lira, we just kind of looked at this one jokingly because it's up, 100,000 pips here, and then up another, I don't know, probably another 100,000 pips, to be honest. From that level to that level, that's another 78, almost 80,000 pips. Oof. So just bring out the popcorn and watch and spectate, but crazy stuff with a broken currency like this. So, okay. You have any questions, let me know. Leave a comment. If you would, hit the like button for this video. I appreciate it. Support the channel. And I'll be back on Friday for a live session for the Pulver Report at 9:30 a.m. Eastern Time. And this is me again on social media, youtube.com/Chris Pulver, Instagram, Twitter, @RealChrisPulver. Make sure it's real me. You can send me messages. I'll reply. And otherwise, leave the comments and all that stuff on YouTube. And I'll see you on Friday for the live session. I'll see you on Wednesday, Thursday for the trading rooms this week. Wednesday, Thursday, Friday for stocks and options. Wednesday, Thursday for the flex room. And then everything on Friday. Okay, happy trading, lots of profits, everybody. See you soon. Thanks, bye.